Good morning everybody, welcome to Stockradar Stocks in the Move for another week. Today's date is the 26th of October 2023. My name is Richard Lee and I manage the Stockradar.com.au website for you. Okay, the big question at the moment is what do we do at the moment? It's a tough market, going up and down, sideways, so we just need to be a little bit careful. So it seems at the moment market nerves are taking control of investor behaviour, so we let this continue to play out until evidence of this effect is dissipating and stocks begin to find buying support again. Okay, so health and travel, for example, whose underlying behaviour perhaps belies their performance at the moment. However, it is not our place to argue with price. The price is always right, so we just let that play out. In the meantime, get prepared, set your targets, observe and be patient. You may need to stare fear in the face when these opportunities arise, but that's always part of the deal when you're trying to take advantage of price weakness. Okay, so that's the sort of game we've got to play at the moment. Be very careful, be very smart. Okay, in trading tactics this week, I'll briefly expand on the idea of what we should be doing now at the moment when the market's in this sort of frame of mind. There are things that you do when the market's in certain states, and that's what we've got to do at the moment. So I'll talk about that in trading tactics. But for the moment, let's get to our top 10. Sort of the usual cobbles. We've got car sales in there, IAG, Magellan, PME, QBE. Paladin's just come in, Rambler's still holding there. We've got Ticket Data, which is also doing okay at the moment. You can see in the chart there, it's come down a long way. As soon as it joined that technology index, it really did suffer quite a lot, and it came down almost 50% or 49% from high to low. It's now formed a little base there above just around $8. It's done a little switch there, a little trend reversal, above the average, above the horizontal line and the downtrend line. We've got a bit of volume there and the momentum starting to get on board as the rise starts to take place. So that's an interesting stock to watch at the moment. It is one that's going up and it's trying to make some gains at the moment. So keep an eye on that one for the moment. Okay, so that's the top 10 we've got to get into at the moment. Now let's get to the overseas markets. Okay, starting off with the Dow Jones Industrial Average, and again we're sort of getting this downward push continuing at the moment. We had a bit of a rally yesterday, which really doesn't look much on this chart here, because I think we came down again last night. But it's that we've got this big top up here still, which is giving us a bit of trouble to concern. We've got a lower high here. We're starting to weaken off, so the pressure is certainly coming down at the moment on this. This uptrend phase seems to have finished here. We're now having correction, so we go through this. What's going to happen next? Is it going to correct and go up, or we're going to get more correction? At the moment the presence is down, and if we look at the S&P, it's a similar picture. Okay, the S&P also is coming down. We've got a little trend line here, which is not hugely important. It's a bit of a sort of a sentiment line and trend line. I much prefer to look at the horizontal lines. We've got a lower high here. We've made a lower low there, so that's a bit of a change from this move here. So the pressure is down, and we've got a little red zone up here, which is giving us carry at the moment, which we can't seem to get through. We've got two-way volume. We've got some good selling, some good buying. The market doesn't know what it's doing. It's coming down. Momentum's going out of it. So that's really what's happening with the S&P. And the Nasdaq's, not that similar. It started to break down a little bit below S1 there. We had a bit of selling here, so it's not looking quite so good at the moment, and didn't really get too near its high previously. So pressure there on the Nasdaq and on the tech stocks. Okay, then we go to the commodities. Copper's still down, as we know. There's no change there. It's just selling, keeping this price going lower and lower. Gold, again, we're back up to this area here. It's still resisting up around 2,000. Just doesn't want to get through it. Even though we had a spike down, we had a spike straight back up again. On some bit of volume there, so it doesn't want to die, but it doesn't want to go up. So it's not too sure, even though we've got this conflict happening in the Middle East, which has driven this rally at the moment. It really can't get through. So we just really have to wait until this trading range breaks to get a good idea on gold. I mean, our stocks are doing okay because the Australian dollar is so weak, although we don't really hold any gold stocks at the moment. Some of them sort of recovering a little bit, but not really convincing me at this stage. Okay, Brent crude, it's broken its downtrend, as we know. It's tried to rally higher. Let me just blow this up a little bit for you. And it's come back down again. It's still holding this reversal at the moment, okay? It's bounced back up again. We saw a bit of selling hit the market, but the buyers came back in and held it there. Momentum's okay. It's above the average. If I were to run a trend and 10th of the average, we'd be up around 7 or 8, I would think. So it's still a bit uncertain here, because of what's happening in the Middle East. And crude does that. It goes opposite directions to what we think sometimes. But for the moment, it is going up, and it is holding this little range at the moment. So our all stocks aren't doing too badly at this stage. Okay, so then we go on to our ASX 200. That's right, so let's just have a look at this one here. We've got lots of levels here to look at, but really the picture is one of sideways movement, okay, and that's where our mindset should be at the moment for the index. Not that it matters to me that much because I'm a stock specific trader, but we can see here the big range here. We had the February 23 high, the June 22 lows, and now getting confined even more tighter here. We're trying to break down here. We're sort of testing support here. It may fail, may move back down to the bottom of the range again. It's hard to know. Momentum is pretty weak again now, so the pressure is certainly back on the downside here. We've failed again up here to get through this area here, which is not a good look. So we come back down to here, probably to test this area again, unfortunately, but that's just the way it is. We can't really make things happen that aren't going to happen, so we just have to let it do its thing. So that's the ASX 200. If we just go now to the stock pick count, again, we've lost another 2 this week, down to 28 of 184 items we cover, including stocks and ETFs. If we break it down, I have only 21 stock picks holding uptrends of 161 stocks. So the breadth is very narrow. We are pretty cashed up in that area, okay, as far as Stockradar goes in the whole portfolio there. And we've got 7 ETFs of 23. There's one new ETF in this week, and that's the bear, which is not such a good sign for us. We might still see some more downside there. So that's come in as a trending ETF on the bear side, okay? So then we go to the portfolio update. Again, we're pretty well marking time. We can see what the accumulation index is doing. Then we look at our flagship portfolio. Still, the Energizer 5 is 5 out of 5 at 15.7 CAGR. So it's still holding its own there. The conservatives is 4 out of 10, so really not a lot holding there. It's still rallying okay as far as performance goes. Then we've got the Energizer 10. These are the long portfolios which we've held for a long time, and they're all doing well on a long-term basis, which we would expect because the trend is up, and that's what the primary premise we work on is the market trends higher over time, and that's why we only go long, we don't go short. Okay, it's not our thing. A lot of people do that, but that's not what we do. Okay, then we've got the shorter term portfolios here, which have really run through this very difficult period of the last 2.5 to 3 years of sideways movement, and they're just keeping their head above water. They are 5 out of 5 because we have this leveraged idea of stock picks where we focus on only a certain amount of stock picks in a portfolio, but we have this huge universe of stocks that we can pick from, and there are a few stocks going up, so we hang on to those ones. Some of these ones here are just marking time in these portfolios at the moment. But that's the way it is. We just have to wait for our time, and it will come through. Okay, so that's really all I've got for the ASX 200. We're going to get into some stocks now. I looked at some interesting stocks last week. We looked at something like CSL, which is having a terrible time. ATM's having a terrible time. A couple of stocks looking interesting, like Capricorn Metals, which I'll have another look at in a minute. An A2M, which has also been fairly weak. So we'll look at a couple of those there, but it's an interesting situation we've got this week. I'm going to focus on a couple. Firstly, the leaders. I've only got 4 leaders out of the 20 leader stocks that I've got in my portfolio, okay? So there's only 4 of them, and one of them which is QBE. Okay, now an interesting situation with QBE. We've got a fairly good break here back in the end of 22. But it's now got into a little Davis box of up and down here. We saw some selling here, which was also some selling here which did have an effect on the price. So it makes me very wary when that happens. If it doesn't have an effect on price, I'm not too concerned about it. But it did bounce back again. The buyers came back and held it again. So it's not a fait accompli. As I mentioned before, the insurers seem to be the one sort of being resilient at the moment. QBE, IAG, even Medibank Private, Steadfast, they're all holding their gains at the moment. They're not weakening off like some of those health stocks that are diving and some of the other stocks that are really diving at the moment, AT Milk, things like that. So QBE, it's still a threat to these highs. The trend is up. The trend intensity rating is +8. There's still buying there. The momentum softened quite a bit through this period, and that's what happens. But it hasn't broken down yet, so we're still holding QBE, and we'll keep an eye on that one for you. But it's still going up, so we're positive towards that one at the moment because we don't really know what's going to happen next. When a trend is your friend, you just follow it until told otherwise. Okay. Now, ArbCorp's another one that I have looked at a little bit. The only reason is we saw a big correction of 52% here. It's now come down and found support about $25, and it's held that area very well during this whole market phase since about early 22. It's now got slightly uptrending lows here, which is always promising, but this still exists here up around $33, I think it is, still holding this price down, capping it. Each time it gets there, it tried here and failed, but came down and made a higher low again. So there's a bit of bubbling support in here. Volume's a bit harder to read there, but generally it's fairly flat, and momentum is fairly neutral, so which is what you'd expect, because this market has been going sideways for a year or so now, or just over a year. So that's ARB, but certainly worth watching. Trend intensity rating is -5. This is certainly a level we were excited about if it did break through here. So again, it's talking about setting your targets, observing, watching, and being patient, especially in this market, and not too frustrated, because that's what the markets do. They frustrate you, and they do all sorts of things. They make you be greedy, they make you be fearful, all these things that it does to you. You've got to try and keep that psychology fairly stable to be able to look clearly at what you see. So that's ARB Corp. Sol Patterson, well, it's just going up, and it has done very nicely. And if you look at Brickworks, it's also doing quite well. It's sort of like a brother stock there, with the Milners being sort of in control of a lot of this sort of stuff. But the trend intensity rating is +8 for Sol. It's going up. The volume, which just squeezed down a little bit here, is okay. Some buying there. We had a little bit of selling here, which did push the price down. Again, the buyers have come back in. And this is what happens with a trend. It goes up, the buyers will come back in and push it up again. It's when our stop goes off and when it starts to make new lows, that's when we really worry. That's when it's a change in behaviour. So for the moment, the behaviour is high highs, high lows, high highs, high lows. And that's what we want to see. Trend intensity rating of +8 for Sol Patterson. So hang on to that one. Now we'll go back to Capricorn Minerals again, which has made a little interesting break up here, which we saw this week. It's going up and down in one spot, which has been frustrating. But again, you know, this is an encouragement. What we see here, a bit of volume here. Momentum is just ticked up, but the reality is it really needs to get through this $5 area or 510 area, which is the old high there. That's where we really want to see. Trend intensity rating is +1, so it's neutral, it's ready, it's primed, it's cocked. We've just got to wait for that to happen, okay? So that's Capricorn Metals. Again, when you look at the metal sector on Stockradar, the trading centre, I think we only have 1 out of about 25 mining stocks. So they're all going down at the moment generally, or they've got no uptrends. But there's a couple here, like Capricorn Metals, which is performing on its own basis, individually, and doing quite well. And you never know, we might get a break up here. And if we do, we're going to jump on it. Okay, so that's Capricorn Metals for you. We're going to follow this one for you right through to the end, and keep an eye on that. The next one I want to have a look at, so that fascinating battle continues. The next one I have a look at is APE. Again, we're not in this stock. It doesn't have an uptrend. It's got higher highs and higher lows, but we were stopped out of this one a little while ago, and now we're waiting for this area up here to break. That's really the all-time high there. If you go right back here, we can see this is the highs for the all-time highs for Eagers Automotive, which is a very significant thing to happen. If it does happen, we always jump on it with our money management closely following behind. So will the market pressures override this challenge? It is probably going to challenge this area, although at the moment it's coming down. We've got a bit of volume here. This is not much momentum there, so it may fail, it may not, but it's certainly worth watching until it really breaks down. We're going to keep an eye on this one because an all-time high is a significant thing, especially in this market. So maybe the ASX 200 and APE will go at the same time. I don't know. Stranger things have happened, but an all-time high, which I'll always keep an eye on that one for Eagers Automotive. Okay, so then we go, I did talk about insurers before. Insurance Australia Group is also doing okay considering the rest of the market. It's going up nicely, performing well. It's come back and found support here, which is always a good sign for me. Support holds for now. It's now starting to rally. We've got a bit of volume coming back into this. Momentum is still positive, although it's slow, which is natural in this market. As long as it stays above zero, I'm not too concerned about it, okay? So we've got a pretty good base here below this stock here. QBE is much different to this one, although it did come down a long way. But IAG looks quite interesting. And as I said before, the insurers are perhaps doing okay at the moment in this market. So that's one we are hanging on to for the moment. So with the trend reversals, There are plenty of, there's a few prospects here. We've got about 7 prospects and about 18 existing trend reversals. As far as the new highs go, we've got about 14 prospects on new highs. Could be Woodside, could be CSR, could be Medibank Private. There's quite a few there that we're watching, talking about setting your targets, observing, watching, being patient. Some will go, some won't. We follow the ones that do, we don't follow the ones that don't, okay? So, and then we've got, in the new highs, we've got about 14 prospects, as I said, and we've got about 10 current new highs occurring at the moment, be it Brambles, IAG, Pro Medicus, QBE, Worley, those ones there. Okay, new all-time highs. I'm not going to go through that today. Nothing really new in there. We're still waiting for Next to do it. And there's a couple of other prospects I've got in there that are existing ones, like car sales making new highs, and they'll hopefully continue to rally higher. Okay, now, specials today. Okay, firstly what I want to go through is News Corp, which is one that I don't cover. It's outside my 160 stocks, but I'd always like to give you something on the smaller end a little bit. And this one here is looking interesting because finally News Corp is making a new high, and it's had a pretty steady move up for this year. Okay, it's been a very high highs, high lows, moved up here. Trend intensity rating is now plus 10. It's now broken this high here. When I look at this high here, I talk about drawing lines. The more points on a line, the more valid it is. Okay, so for me, the high here at 30 is about 33.95. We've got 1, 2, 3, 4, 5 points there, whereas this point here, which I've got in the dotted line, has only got one, bit of a 1 week wonder, who knows what pushed it up there, but really I take this here as my signal. So this would be a new high in my book. It's breaking high, the trend intensity rating is plus 10, the trend is up, it's above the moving average, volume is good, and momentum is very bullish. So News Corp is one to watch, I think. There's a few moves there being made by Mr. Murdoch and his son. He's now apparently the boss. I don't really think so, but he probably he is. So News Corp's an interesting stock for you to watch if you're looking for a little opportunity there. We did see good volume back here and good volume here. So it's all doing the right things, News Corp, and doing its own thing compared to the market. So one to watch. Keep an eye on it. It may be something interesting for you there in the absence of other opportunities. Okay, now I'm going to go back to ATM again. Just look at 2 stocks here that are a bit of interest. And I want to look at these stocks that have come down a long way. So we've got A2 Milk here, which I talked about last week, and looking at this low down here, down at $4. Okay, now this week it's starting to fall through it, so it may go lower, I don't really know. But whenever I'm looking for a trend reversal, a stock comes down, if it hits support, that's my first port of call. I look for what's happening there. And if it starts to hold there and starts to rally and other things starts to happen, which I'll talk about in trading tactics, then I will build a case for reversal. This may fail and continue down, I don't know. But this week, it's starting to break this. It may close up above here, I don't know, and hold, which would be a good sign. But for the moment, trend intensity rating is -8, lower lows, lower highs. Volume's pretty weak. Momentum's also weak, so there's not a lot there at the moment. It may just fall through and not give us an opportunity. We move on from that there. We don't fall in love with it, or we don't even have any preconceived ideas on it. It's going to fall and falls further. Okay, so that's A2 Milk. You can keep an eye on it for this week, but it's starting to look a little bit weakish in there at the moment, so it may not develop to anything. Now, the next stock I want to have a look at is Qantas, which I've had a look at quite a bit lately, but it is a very topical stock, and I just want to give you a look at the chart here and talk a little bit about what we've done and what's happening with the stock. Okay, now we all know that the situation with Joyce and the board, they've been very, very naughty, and my wife actually said something to me the other day about this stock, and she said it's actually behaving in a very, for the stock that's called the Big Australian, it's actually behaving in a very un-Australian way. And that really sort of gelled with me a little bit, and it's probably why we're seeing this huge fall, because, we'd like to support our own businesses, but when they do things like that to us, we don't like it, because we are Australians and we don't like that sort of thing. So this is why it's getting caned, and it may get caned a lot further, but it is, in the end, a monopoly stock, and it may well recover. So we try to put a lot of this sort of stuff aside and have a look at the price. So if I analyse the price at the moment, I'm sort of looking at what do we do now with Qantas. At the moment it's falling, so we don't do anything. Okay, but if we look at what's happened here, we had a signal back here, back in here, end of 22. It rallied quite nicely, and then we saw this this area, just this huge distribution phase where the sellers were selling, and one of those big sellers was Mr. Joyce himself. And I'm going to talk a bit more about this in the newsletter, about how when you look at board behaviour and you look at stocks behaviour, because it's an interesting thing what was happening with Qantas then, with the board, and what they did and what they thought they were doing and what they thought they were covering up. And eventually you get found out as a public company. But we did sell out of this one before it broke down. We tightened our stop up as this started to develop. But then we saw that this was sort of the warning area here where they just couldn't get through here. Then it started to break down here. And so this was the result of what the price did, of what happened with Joyce, of what happened with the selling tickets that weren't there. All these things were so negative, and we just did not like it, and it's been caned now. So that's fair enough. So now we move on. This is the result. We're seeing it's probably down about 30% or something like that at the moment. It's probably going to come down further. But if we look at this here now, we've got a big support level down here at S1, which is around about 430, 435. And that could be an area we could look at, as I said before, as our first port of call if it is going to hold and start to rally again. And it may not. It may fall further. If it falls through there, then you've got 250 price tag on it, which is probably starting to get on a very interesting sort of level. So there's a lot to happen in here, but for the moment it's falling. But this is what you look for now, okay? So this fall at the moment, we can see firstly it's on huge volume, so you just don't want to go near it. It's like catching that falling knife thing. Forget about it. And momentum is so weak, so forget about it. So its trend intensity rating is -10, so it's a no-no. So it's really a matter of, as I said before, we've got to observe, set our targets, see what's happening, and look realistically at what's going to happen, because even if it does get down to something like 250, you're probably going to be the market will probably be pretty despairing about this stuff. Why has it come down so far? But it's probably an opportunity where we need to stare fear in the face and say, okay, if we've got the evidence here of support, then some volume, and then some price advances, then we can make a case for it. But that hasn't happened yet, but that's what you will be doing, and you will be having to stare fear in the face, because you buy fear and you sell greed, and that's really what we've got to do. Not always easy all the time, but I find this a really interesting exercise as to what's happened and what the board behaviour was at the time. And as I said before, I'm going to talk about this more in the newsletter, a bit about how this can affect share prices. So that'll come out next week, the newsletter. But Qantas for the moment, he's not a happy camper, and why should it be? And I can't believe Richard Godge is still there. He shouldn't be there. Nobody wants him there. Even though he thinks he's the right person for the job, we don't think so, but that's just the way it is. Okay, so that's Qantas. I move on. Okay, let's go to trading tactics now and talk a little bit more about what we should be doing now. Okay, so firstly, a word of encouragement and reassurance. There are so many stocks that are down and out, which in the end are our future opportunities, okay? So to a certain degree, a bullish market is great and we will make money, but then a bearish market comes along and it provides opportunities for us to either add to our long portfolio or get trades at discounted prices, all sorts of things. So this is an opportunity, and it always is. So it's times like these we stay true to our strategy, which I'm trying to at the moment, even though it's difficult, and focus on the realities of the market cycles. As history shows us, they always bounce back. If you look at a long-term chart, the last 100 years, the last 50 years, the market goes up. And we're going through this 2 or 3 year period. You know, the Dow and the S&P did it a few years ago and had an explosive move. So we've just got to wait for that to happen. So, you know, it will happen at some stage. You just have to be a little bit patient about the timing of it. So what do we do now? We build a common sense case for a change of trend using price as our guide. Now you may use fundamentals, you may use contrarian thing, all sorts of things, but you must make your case regardless of what's happening out there in the news and things like that. Make your case and be true to your strategy. When I look at things like Qantas, I look at things like ResMed, I look at Sonic Health, A2 Milk, a lot of these stocks, you know, really, especially in that health sector with CSL dropping so badly, you know, really they are going to be interesting situations when we get the evidence, okay? So at the moment it's about minimising your risk and don't take a guess or a punt, because it'll probably cost you at the moment, okay? We may have further to go down. We saw the ASX 200 there, which means the leading stocks aren't going to be that happy at the moment, so we've got to be careful. So let's just go through the simple steps using prices to what I'm going to do when I'm looking for reversal. So firstly, I look for prices to stop falling, Okay, first step at support. Hopefully there's support there. If there's previous support there, it adds a little bit more credence. And then if it just stops falling in mid-air where there's nothing there. So volume then expands. Buyers start to come into the market. So we're looking for that buying support to come into the market. No buyers, no uptrend. Okay. Once that occurs, we then look for the price to make advances. Okay, and then as it makes advances, we start to develop the case further. Okay, it's always a conservative thing. I develop the case further. I look for the trend turn. I look for volume. I look for price action to do that, and I look for my trend intensity, which is my combination of my 4 indicators, to make a picture for me, to make a case for me that the trend has turned and has confirmation from the indicators, moving average, trend, volume, and momentum. Okay, so that's what I do. And that's how I do it, to make sure I know exactly that I'm on the right side of it. And I'm not going to be on the right side of it all the time, so I then have money management to protect any position that I have against taking any big losses at all, because I don't take big losses. I'm not allowed to. Okay, so that just sums it up fairly simply for you, I hope, without wondering too much about what's going on. We look at things like Qantas, there's so much going on, but look at the price is falling, and there's your answer. Okay, so we're in a difficult market for trend and momentum traders. It's hard, there's a few stocks there, but not a lot. So we need to be patient and we need to prepare for the next advance, which will occur. So don't despair, protect your capital, keep smiling, the tide will turn eventually, okay? So that's just a bit about how I'm going to do things for the moment. So just about all I've got for today. Bit of a mouthful, that sort of stuff, but there's a picture there, and there will be some opportunities that will come aboard. I just want to go through what's happening at Stockradar, talking about the newsletter, why sometimes we need to reverse our thinking to get right. Now, I talk a bit about this because it's sometimes very difficult to do that, and it's probably a bit about contrarian thinking sometimes, about saying, well, things are so bad that I'm going to buy it, or the price is so bad that I'm going to buy it. But, you also get your price evidence, which is actually good evidence, but we ignore it. So we've actually got to look at what we see. So we sometimes need to reverse our thinking to get it right. So that's something I talk about. Contrarians get it right at market tops and bottoms. In the micro view on the sectors, I look at health stocks, of interest, CSL, Sonic Health and ResMed, and there's a couple of other ones I'm going to look at as well in the newsletter. In my Radars rant, I talk about what is the real reason we buy and sell stocks. We think we know what we do, but what really makes us buy and what really makes us sell? Now, that's talking about looking a bit inward, really. We think we might base it on this, we think we might base it on that, then we all of a sudden go make another decision, which is driven by what? By something in here. So we've just got to try and understand what it is that really drives our buying and selling. And I talk about that in Radar's rant. The new selection of stock tables for you to look at, especially the key low one, which I've added, which is probably a timely thing at the moment. The key lows are very interesting. Some are going to hold, some aren't, but they will provide opportunities. When I look at Sonic Health, it's holding. Look at CSL, it's not holding. So we take each one as it comes. Okay, so that's what's in the newsletter that's going to come out next week. So there are lots of possibilities out there. So here I've just covered a few today. Some will trigger reversals and some not, but we take each on their merits and evaluate each situation based on our strategy for engagement. On your strategy, my strategy, whatever it is, you must be true to that. So this video is really designed to outline the approach that I take in a very realistic and independent way for you. So you don't see any advertising on my chart, you don't see anybody else pushing anything on my site. It's all my own information and my own ideas and my own thoughts, okay? So unbiased, which we'd like to see because there's a lot of barriers being pushed out there. So this week, stay safe, respect your trends, listen to your stops, and I'll see you all next week for another chat. Thanks very much for listening.